But for more on the consumer and retail earnings, let's bring in John Sanmarco. He runs the Connected Consumer ETF at Neuberger Berman. John, it's great to have you on, and I'm going to start right there. What are you seeing in the tea leaves that we have so far around the state of the consumer as the holidays get ready to kick off?
Yeah, thanks for having me on. I don't have a ton to add to that pretty rich perspective, and that's what the data we track show us, is that the consumer is indeed continuing to shift from wants to needs and trading down to value channels and discounts. And perhaps my 2 cents would be, we don't see any reason to expect that trend to reverse in the near term. The excess savings that have kind of kept the consumer artificially aloft the last couple of years, that's been depleted, and some of the forward-looking job data that suggests perhaps less robust employment ahead, that could become a challenge. So we think the consumer kind of continues to muddle along, spending on needs and pulling back on wants.
Yeah, I want to get into the needs versus wants piece of this a little bit more. I mean, because there's some very clear-cut needs versus wants. Groceries, for example, versus some of the more discretionary big-ticket items that, Target talked about, for example, today. But then you have this gray area. Makeup, for example, has had a strong showing so far this quarter, which is going to make Ulta earnings interesting, too. And that is almost, at least among women, seems to be falling into more of the need category. So how are you thinking about that definition, and what does it mean as you look across different retailers that are participating in different parts of the value chain?
Sure. I would put beauty broadly into a bucket of niche categories that are kind of the exception. And, I think there are demographic trends at play. There are attitudes around makeup and the use cases for beauty products. There's innovation that expands the categories. And this has just been a very, very long-term secular growth trend. So even if there's probably some cyclical pressure we will see there, I still think you likely stay in growth mode in a terrific category like that. So we own Ulta in the NBCC ETF that I co-manage. And, our view there is exactly that. We see great data around how young people are approaching the category and coming back to the category.
John, this seems all encouraging for people who are long Walmart, since they're big in grocery, which is an essential, and since they're a big discounter. But what sorts of things are you going to be looking for in Walmart's report to see whether it can continue to grow beyond these all-time highs where we see it?
Sure. Yeah, Walmart is absolutely, as your question alludes to, in the right place at the right time. We also think, that's not to take anything from management, where we think execution has been phenomenal, getting the right product at the right price to the right place, also at the right time. I think incrementally from here, we just learned today from Target that there could be some, tailwinds on the margin side that ought to help things like merchandise mix and perhaps shrink. If it's not getting better, at least it's not getting worse as quickly. Freight has improved. But what we really like about Walmart, and we own this one because it's in the right place at the right time in our fund. And what we really like is some of these strategic adjacencies where they've had a ton of success. Areas like online advertising and third-party marketplace. Those are the two big ones that are super profitable businesses where the data show us that Walmart has a right to win in those areas, and we think that can change their P&L in the years ahead. Third quarter tomorrow should be a proof point along that journey.